What's going on, guys? It's your boy WarmFX here, back with another market breakdown. I'm doing this for all my students that are already enrolled into the mentorship, and I'm also doing this for you guys that are having a hard time navigating through the markets. All you see is a bunch of choppy price action, and you really don't know how to trade it or navigate through it. And some of you really don't even understand why we're getting these kind of market conditions in the first place. So stay with me here. Make sure you guys like, comment, subscribe for more trading content. I feed off of energy, and if I see that you guys actually enjoy these videos, then I'll continue to make more of them. But without further ado, let's just get into it. Now, my students, of course, we did a market breakdown yesterday on Sunday, and I was just really talking about some of the things I was anticipating happening in the market going into this week. I showed you guys how we can use our strategy to align price with time and how we can anticipate either geopolitical news events, or we can anticipate rate decisions, or we can anticipate the outcome of price action just based on what we have scheduled on the economic news calendar. So we're just going to get into that first. We're just going to talk about some of the news that we had lined up for this week, and then we'll align this with the areas that we were targeting on NQ as well. Okay, so first things first, we did we did have red photo news this morning at 9:30 as we were pushing into a point of interest that we'll show you in a second. But this is what I want to call Hell Week. I call this Hell Week. The reason why I call this Hell Week is because, as you will notice, every single day, starting from today and then going into tomorrow, we have red photo news every single day leading up into NFP. So Tuesday, which is tomorrow, March 31st, of course, we do have red photo news as well. All right. And I encourage all of you guys in the mentorship to go ahead and make sure you guys pay attention to this every single day before you guys even think about getting on the charts. And then on April 1st, we also have retail sales, we have non-farm payroll, employment change, and then we also have ISM manufacturing, so at 9 o'clock in the morning. So, of course, this is just going to lead to us having more volatility in the market. And if those days of us getting continuation trades and those clean entries are going to be far and few between going into this week. In fact, I anticipate a lot of choppy price action all the way into Thursday, which is what we have unemployment claims. So at 7:30 in the morning, we do have unemployment claims on Thursday. Those of you guys that are trying to trade different prop firm accounts, I highly encourage you guys to just stay out of the way this week. You guys don't want to risk your capital, and you guys don't want to have to start off your evaluation as well or reset your accounts just because you got a lot of volatility in the market. Usually when this happens, we have a lot of accumulation, which means that they just want to build and generate as many orders and liquidity as possible before major moves happen. Long story short, short story long, large institutions are not participating until the release that they're waiting for is announced. So it could be, again, it could be red photo news for tomorrow. It could be the red photo news on April 1st, or of course it could be unemployment claims. And then let's not forget on Friday, we also have non-farm payroll, okay, and unemployment rate. So we have a million reasons why we don't need to participate in the market. But on this next scene here, I'll show you guys on a chart how our strategy that we teach in the mentorship in Trader Village and in the Day Trading Academy, that our levels are still going to get hit regardless of what the news outcome is. Okay, so that's the best part about being in the mentorship, is that you guys are able to take advantage of some of these opportunities with a lot of experience. But those of you guys that are brand new and beginners, I don't want you guys to do this because it can make you question if you're doing everything correctly in the first place. So we'll just start on NQ. Now, we are already hitting 20. Oh man, we edged it actually, guys. We barely edged it. I've been screaming 22,000, 22,000, 22,000, 22,000. You guys can go back and look at some of the other previous lives and look at some of the other videos that I posted. We were over 4,000 ticks away from this level. And as you can see, we just absolutely nosedive right into it. So yesterday in the mentorship, in our video, in our call, we talked about what we're anticipating happening going into Monday, because we understood we had red photo news lined up with time and price today. So let's just get into it. We'll zoom in here. We already identified this level, by the way, for those of you guys that are just now joining us on a weekly time frame. I already anticipated that we had to rebalance this entire move to the upside. And now, depending on how we react here, is going to determine what I would assume is going to happen going into the rest of the week. And I'm just going to be honest with you, we did respect the midpoint of this FEG on a higher time frame. So I'm not going to be I'm not going to say that I'm looking for a reversal, but I'm not going to be as bearish as I once was before we got to this level. So we'll go down to the daily time frame, and this blue line is just going to be price action for today. I identified some areas here, guys. Of course, at this point, everybody's probably screaming bearish, bearish, bearish. We're just gonna just drop, and a lot of retail traders are gonna be FOMO'd into shorts, but not us, because we already understand that the algorithm needs to flip the bias. They need everyone to be on one side of the market so that way they can take advantage of it. Okay, so if everyone's gonna be bearish, then that is gonna trigger a buying opportunity for the market, and it's gonna give us a retrace. Or if everybody's gonna be bullish, it's gonna be vice versa. Everyone's gonna flip to being bearish. Okay. I'm sorry that the sun is setting in the penthouse, so it's going to get a little dark in here. Actually, here, I can fix that real quick. The perks of living in the high rise, right? And I don't want to disappear on you guys. Total darkness. So here we go. I'm anticipating if we do respect this level going into news that we have for the rest of the week, we can anticipate some type of retrace to the upside to respect this fair value gap. And then it'll look something like this. Push down, right? It might even fake everybody out with a wick, then reverse, leave an engulfing candle behind, maybe some type of displacement candle, reach up in here. A lot of traders are going to get FOMO in the shorts right there, and then it's going to go right back up to retest this fair value gap. And from here, it's going to determine what we're going to expect to happen in the future. Two things can happen. It can push above, right, and come back and retest the zone, and we're going to use this as jet fuel, and this would turn into an inversion, and we're going to target some buy side liquidity up here. Or it could totally respect it, continue down, and continue down to target another level that I have on a higher time frame to the left. But either which way, we're going to wait for confirmation. And confirmation means we're going to wait for some type of engulfing candle, and then we can refine our risk from there. Okay. Now, what happened today? Let's go into it. Now, I told you guys yesterday that we were anticipating us opening and giving us a retrace because everyone's going to be bearish at market open. And that's exactly what it did. Not only did price retrace and give us a push to the upside, but it came right back down to validate that we do want to come target the 22,000 level. I just want to click 22,99999. After that, it might trigger a buy. We'll see. But on a 1 hour time frame, as you can see, and we'll stretch out our chart here, price gave us a nice chop, right? And we identified our FEG right here that price came to fill. And price pushed right above it, made everyone be bullish, flushed right back through it, which told us that this is going to be our new high, right? This is going to be a level that we want to be respected. Price came back after a swept buy side over here on a smaller time frame, but swept buy side liquidity, dropped down below that fair value gap, retracing to that FVG on a smaller time frame, and we'll mark that out for you as well on the 1 hour. This is going to be our new FVG point of interest. Okay. Hopefully you guys can see that. I'll zoom in so you guys can see that. I know a lot of students are having a hard time marking out their fair value gaps. And guys, you just gotta practice this. You have to practice this over and over and over again for you guys to identify these levels quickly. If you guys can't identify these levels quick enough, then you guys can be liquidity. Let me rephrase that. If you guys cannot identify these levels early and quick enough, you will be liquidity. All right. But here we go. Sweep, flush, retracing to the fair value gap. This is all I'm looking for. I know that this level has to come get respected, and guess what? If it doesn't come back to retest this level, then then there's no trade, guys. Boom. This is my point of entry before this candle worked up into it. I was waiting for price to come rebalance this level. It did. Target this. Stops above the highs. Absolute flush. Targeting our previous sell side liquidity level, which is right here. And then we're done for today. Okay. Now, this trade took a while. I'm not going to sit here and act like this was a quick trade. But I want you guys to get used to seeing this. All right. Let's go back to the 15-minute now. Same thing. This is our same level. Price pushed up. Click buy side liquidity. Okay. Remember, you want to look for to identify our buy side levels. I just want you guys to look for wicks that stick out higher than everything else. I want you to imagine some type of nails sticking out of the ground. Okay, that's what I want to train your eyes to look for. I want you to scan these candlesticks, and I want you to see these wicks and wait for price to target these wicks. If price pushes up and rejects it just like it did, that's telling us that this could potentially be liquidity. This is a liquidity level, right? If price reaches up into it and just absolutely comes right back down, almost like a complete fake out, then that tells us that that could be our liquidity level. So now we need to wait for confirmation. What's our confirmation? Sweep a buy side liquidity, give left with an engulfing candle, our tap and go, right? One of the first steps of the tap and go, engulfing candle to the downside, retracing to the fair value gap, right? Define our risk, stops above the high, tap into the midpoint, entry at the midpoint as close as possible, absolute candle flush, targeting previous sell side liquidity. Over and over and over again on multiple time frames, and it won't stop. Now, let's just say price did push above this level, okay? Let's say price did this, which it absolutely could have. Faked everyone out and came right back up to the upside and turned this into an inversion fair value gap. And then came right back down. Then that means there's no trade. If it's just going to play hopscotch above your levels, then there's no trade. Don't force it. That's literally, if you want to know when I need, Worm, I don't know when I don't need to trade. That's a good example. All right. All right. So that's what we got for NASDAQ. If we want to wait until tomorrow, we got red for the news every single day. So price can literally just ping pong back and forth, guys. It can literally just ping pong between two levels and consolidate. So don't blow your accounts flipping from bearish to bullish. Pick a direction and stick with it. If you're wrong, then close the charts. Don't over leverage. Split your leverage in half and go about your day. Okay. If you win your first trade, catch 20 pips, 20 ticks, 40 pips, 40 ticks, 15 ticks. Good job. Walk away. Don't go back in for more. Don't be greedy. Okay. All right. Now let's go ahead and switch over to our forex side, and let's go look at gold. Okay. What did gold do today? Gold is still at our same levels. We identified our buy side level. We identified our short-term sell side level. And as you see, price actually didn't do anything. All it did was push up, come right back down, push up again, and now just sitting there, stagnant. Until price sweeps one of these levels, I am not activated. Because as of right now, price is just ranging. Okay. This is the bottom of the range. This is the high of the range. This is the bottom of the range. This is the high of the range. Price is not giving us any type of continuations like this. And we do have identified our levels. We were going to be bullish, and we do know we got to rebalance this level that we identified on a different time frame. And we do understand that this is buy side liquidity, but at the same time, we got to be patient for us to get there. We need to wait for a clear opportunity. That's all I have on gold. Now, let's switch to oil. Last time we talked, right? I think we were on live. We talked about this level being the line in the sand that we want to see price close above. And then as you can see, price did use this level as jet fuel, okay, to potentially give us a push to the upside, all right? That's exactly what we anticipated. Why? Because we understand we got to come target this area. We identified this area on the live. I'll do it one more time for you guys because I know nobody saw me do it the first time, all right? So I'm going to show you how I identified this level because nobody's going to be able to see it on a bigger time frame, okay? This is a move that I use. Nobody talks about it. We're going to just measure the 50% mark of that candlestick wick, and we're going to go to a small time frame, and we're going to look to see if we can identify some type of inefficiency, some type of order block, some type of fair value gap, right, on a different time frame inside that candle wick. Not all wicks are the same, all right? What do we have here on the 2 hour? And then also, what do we have here on the 1 hour? We have a engulfing candle that inverted this fair value gap over here. And then also we have a huge FVG here as well left behind. So we're just going to identify this level here. And I do understand the price needs to come rebalance these fair value gaps. Price always rebalances. The algorithm always re-references these areas. It always re-references buy side liquidity. It always re-references sell side liquidity. And it always rebalances fair value gaps. There will be no fair value gap left behind. You can quote me. No fair value gap left behind. Okay. Let's shrink our chart. What did price do? Push above, nice candle closure, use the top of this consolidation level and these order blocks as jet fuel, tapped it and chopped, and now it's programmed and offering higher prices, and it's going to target the 109 level and potentially target 114. 103 is in the past now. I was targeting 103. As you can see, I've been screaming 103 for a while now. That level has come and gone, okay? All right, let's go into Bitcoin. Same thing for Bitcoin. Let's go on a bigger time frame. We talked about this on the live, right? All these guys FOMO'd into longs. The guy that was talking crap about me on Facebook, he saw that price tapped into the fair value gap and he got all excited and started tagging me again. And as you can see, price rejected the fair value gap. Womp, womp, womp. Okay. Until price closes above it, and I said this, until price closes above this FVG, we have no reason to be bullish, guys. We have no reason to be bullish until we see something like this. And I don't care if you're trading corn, oil. I don't care if you're trading Forex. I don't care if you're trading silver. I don't care if you're trading NQ, Tesla. If price is giving you lower lows, okay? This price is giving you lower lows. There is no reason to be bullish until you see price give you an engulfing candle to the upside and it has some type of displacement or a fair value gap or inefficiency for it to come fill. Then we will wait to see if it holds this level and use this as jet fuel to target our high. Now, a couple things here. Guess what this looks like for you retail traders? Take a guess. Just look at that and tell me what this looks like. And I'll even write this out to just show you that retail concepts don't work. I simplify. I take all these crazy fancy indicator patterns out because we're all talking about the same shit. As you can see, what is this? Oh, that's an inversion head and shoulders. That's an inverse head and shoulders. Shut the fuck up. This is price sweeping sell side liquidity, pushing back up, right? Leaving a fair value gap behind, retesting the FVG to inefficiency, rebalancing, and we're using this to mitigate our risk, and we're entering at the midpoint, which is what I call tap and go, and we're targeting buy side liquidity here, or some type of inefficiency to the upside. Simple as that. Okay? Really, really simple. Okay? So until we get something like that, there's no reason for us to be bullish. Until price targets the level that it's been trying to target this entire time, which can be sell side liquidity down here, or, and I know you guys are going to hate me when I say this, 45,000. Okay? I know it's taking months to get there, and some of you guys are so freaking impatient. That's why you guys aren't profitable. But guys, these are long-term positions. How can you know if you're going to be bullish or bearish if you don't know the higher time frame narrative? All right? So that's all I got for you for this market breakdown. I'm probably going to do another one tomorrow because we got a lot of volatility. We got a lot of red folder news going into the market. I am not diving into each stock because what it looks like today can look completely different tomorrow. As of right now, we are bearish. Okay. All right. That's what I got for you guys. If you guys have any questions, make sure you guys like, comment, subscribe. Follow me on Instagram for any updates. And if you guys want to join the mentorship, make sure you guys send me a DM so we can schedule a call and see if you're a good fit for the team. I only want serious people that are dedicated to this, that are trying to escape the matrix and that are trying to escape the 9 to 5. Guys, you guys cannot save yourself to death to have the lifestyle that you want. You can't save yourself. You can't save every single dollar to outpace inflation. The game is rigged, and it's only going to get more expensive, especially with all the stuff happening in the Middle East. Okay? All right, that's all I got for you guys. Like I said, thank you guys for joining me. I'll see you guys on the next one.